Hello everyone, this is today's video analysis for March 19, 2019. Today we're looking at the USDCHF, the US dollar, versus the Swiss franc for today's trade analysis. Starting here on the daily time frame, a couple of things that I want to point out here, a couple of different trends. Previous uptrend, black trend line on the left-hand side of the chart. Interesting scenarios going on there when we reached into the pink shaded area, market reversing from the pink zone at the top of the chart where the blue circle is and starting to turn back lower, getting under the yellow zone, heading to the green zone, and then to the blue zone. Shortly after that, within the blue trend line, we see the market finding green circle at the blue trend line, resistance under the green shaded area. Not too far after that, you saw resistance again under the green shaded area, and then it continued the downtrend to the bottom of the blue trend line. Then it came back up for a period of time, once again finding resistance at the green zone, bouncing back down, finally getting above, finding support on top of the green zone within the rising black trend line, right back to the pink zone, back underneath it, into the black circle, we see support at the green zone. So what I'm trying to point out here is historically, this green zone has been a very significant decision point. You see all of the green circles showing resistance. You see the black circles showing support. And I could go on and on back in history showing significance around this green zone. Happens to be 0.9990 down to 0.9975 is that green shaded area. So today we see the market approaching that green zone. So we now have somewhat of a higher expectancy, higher confidence that this green shaded area will become support, because historically that's what's happened. We've seen trading decisions made around this green shaded area, 99.90, 99.75. So as it goes down, if you're in a short, this becomes a target for profit. If you're not in a short, it probably means you don't want to sell or go short on top of that green zone because there's a high probability of support there. So the only reason you would sell this currency pair is, number one, rally back to resistance. Look at the black circle. The resistance is now at the yellow shaded area, or it eventually, like back on the left hand side at the green circle blue trend line, gets underneath that green shaded area. We also couple that with the 100 period simple moving average, the green wavy line coming into the chart. That also showing support at 99.75. So as we've just discovered here, there's a good high probability of support here at the green zone on the day. And we only expect it to go lower if it can break through that green shader. Of course, there's lower levels to shoot for if it does, but at least at this point, we don't have high confidence in that yet until or unless it gets underneath that green shaded area. So selling today on the dollar franc may be a little bit difficult because it's not breaking through the green zone. We're not at resistance at a higher level. Our risk reward wouldn't be balanced in our favor to go short today on the US franc. Let's zoom in a little bit. Let's get a closer view into that. You see the blue trend line. We are falling, of course. So if you're wishing to sell the dollar franc, that would be in line with the trend, the momentum, the sentiment right now. But again, it just doesn't make a lot of logical, common sense to do it right where we currently stand for the dollar franc. It needs to get under the green zone, or at least rally back to the yellow shaded area before you decide to go short. That's closer to 1.0025. So we're a long way from that, and we're too close to the green zone to go short. So if that's the case, maybe there's an intraday opportunity for a little bit of a bounce buy on the green zone. Now, I'm not saying that you should always buy against the downtrend, but there's always that opportunity. I mean, all you have to do is look back to the left-hand side right here, and right where the red trend line is, note this was 1, 2, 3, 4, 5, 6 days, 7, 8, 9 days that it sat here at the green zone before turning around and going back up. So 9 days we sat at this green zone. I don't expect that to happen again, because we have some significant news coming up this week for the U.S. and for the franc, for that matter, but definitely an area that we want to take note of. We've seen support here before and reversal to go back up, so we want to make note of that. If we were to suddenly see some infusion of buyers, let's say it comes down into the green zone, we get a large blue candle or some indication of bullish pressure, a hammer candlestick, bullish engulfing candle, then we have an opportunity for longs back in the other direction, targeting back to the yellow zone, or maybe even all the way back up here to the pink zone if the market reverses significantly enough like it did here at the green shaded area. So watching for opportunities for breakout lower, that might be something to consider. A breakout under the green zone may give us an opportunity to go short on the dollar franc, or potentially sudden reversal from the green zone, we could have an opportunity to go long once again for the dollar franc this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.